Hi guys, welcome back to this Money Control live stream. You're tuned into IPO Watch, and today we are focusing in on the IPO of Unimech Aerospace. It's a 500 crore rupee IPO, including a fresh issue of 250 crore rupees. The company has raised 149 crore rupees via the anchor book, and anchor investors include notable names like Goldman Sachs, Abacus Diversified Alpha Fund, Kotak Mahindra Life, ICICI Pru Mutual Fund, Axis Mutual Fund, Tata Mutual Fund, HSBC Mutual Fund and the likes. Well, we have the management joining in to share future plans and the post-IPO roadmap. Joining me is Anil Kumar Puthan, who is the CMD of the company. Great to have you on the show, Mr. Puthan. You're a manufacturer of and supplier of critical components in aerospace, defense, energy, semiconductor industries. Give us a sense of your product portfolio and how much of a total addressable market you have.
Yeah, so Unimech offers two categories of product lines. One is aerospace tooling, which is very high complex turnkey assemblies. And second segment is precision components and subsystems for various aerospace and energy and semiconductor sectors. So predominantly high mix and low volume, high value kind of products. And the overall addressable market I'm talking about, both aerospace and aerospace tooling as well as precision component together is exceeding $200 to $50 billion.
Right, you're raising 250 crore rupees via fresh issue, and a portion of it will go towards funding capex. What are these capex plans? If you can elaborate, tell us more about your plans.
Yes, so out of 250 crore fresh issue, we have a capex, a bigger capex portion actually. So there are two phases for the capex again. Okay, the first phase is already kind of started, and it will be realized before in a couple of months, and that goes to predominantly the plant and machineries. When I say machineries, predominantly CNC machines, high end and high precision CNC machines, welding centers, as well as some of the special process units. And even the second tranche that we are planning is also in the similar lines, okay, but that will be realized in 12 to 18 months from now.
Right, bulk of your revenue comes from international markets, right? Exports contribute over 90% of total revenue, or contributed 90% of the total revenue in the first half of FY25 and the last 3 financial years as well. What is your long-term goal here?
See, yes, you're right on the overall aerospace portion of our business. It's more than 90%, and also exports more than 90%. So if you look at it, the whole overall industry, aerospace industry, predominantly the OEMs are based in the Western world, both on the the commercial as well as the defense platforms. So, and also the tier ones are also based out in the Western world. So that's one of the reasons why we are export heavy on our revenue portion. Now, coming to kind of diversification, we are kind of looking beyond aerospace. We are already working on nuclear power sectors, as well as semiconductors, as well as some of the high-end energy subsystems actually. So slowly we would be diversifying beyond exports. Especially the nuclear segment is predominantly domestic, and some of the defense programs also we are working with the various Indian customers. So you would see improvement in the diversification and reduce dependency on the exports.
Sure. Of course, you said that you will look at newer areas for revenue generation. How much of it would come in from precision components? Because that just about formed somewhere around 2% of your total revenues in the first half of FY25. How is the mix really going to evolve going forward?
Yeah, so while precision components and subsystems is an emerging business within Unimech, So we kind of are targeting, it's going to be about 70-30. 70% is going to be aerospace tooling out of our business in next 4 years, and 30% is going to be the precision components.
Sure. Let's also talk about your key markets. Your key markets include the US, Germany, UK. Any other geographies that you are looking to expand into?
So from customer base, we predominantly cater to US and European market. Um, uh, Definitely, some portion is going to Middle East, Singapore, as well as UK. Uh, uh, from a expansion point of view, we are planning to kind of have our own footprint, our own factory in US region, because that's where the maximum opportunity can be utilized, and especially considering a lot of defense programs that are not coming to India because of various restrictions, and also a lot of larger assemblies that out of the tooling segment, a lot of larger assemblies we are not able to cater because of the logistics cost, impacting the overall cost of the product that we sell. So we want to have our own base in US in the coming days.
Sure, looking to have your own base in the US as well in the coming days. But let's talk about the financials then. In terms of your revenue, you've seen a very strong CAGR of 79% over FY22 to FY24. Going forward, do you have any aspirational target that you're working with? And what would be the key drivers? Anything you can share in terms of goals over the next two to three financial years?
Yeah, so we had a significant growth, CAGR growth last 2-3 years. While all this capacity expansion that we are doing, is in line with our kind of the growth strategy. So, for example, now already we are looking at doubling our capacity in next 3 to 6 months time, and that kind of gives, if not the same kind of the growth, but at least similar kind of growth. But what I would expect investors is, or what I would kind of mention to investors is, we are looking at a growth, reasonably good growth from here onwards. That's where the maximum capacity expansion is happening, and both on the aero tooling as well as the precision components. So that's what I would like to mention on the call.
Sure. What are your capacity utilization levels at the current juncture?
So current utilization is about 95%. Most, if you see it last 2-3 years, our utilization is always at 90-95%. So that's where we're kind of forward looking and investing on various equipments and increasing the capacity.
Sure. Let's talk about the margins as well then. In FY24, you achieved an impressive EBITDA margin of almost 38%. Are the levers in place for margins to go beyond 40% in the next couple of financial years, or would you say that because of this capacity expansion drive, that would have to wait for a few more years?
Yes, you're right. So while we intend to kind of work on only high margin projects and high margin, the segments, you can kind of see similar margins in the coming days, if not the same. But as we are expanding rapidly on the capex, definitely it would take time to kind of realize the similar margins in the coming days.
Last couple of questions really, just going through your total borrowings as well, they have gone up quite significantly. I think they've jumped almost threefold. What was the reason behind that, and going forward, how much would you need to borrow, in order to fund your capacity expansion? Because from the IPO proceeds, you're using a portion of it, but would you be needing more, and how would you be looking at funding it through borrowings?
No, I think partial borrowings will be kind of, be cleared through the IPO proceedings. So this is basically kind of expansion strategy actually. So if you see, doubling a capacity is not an easy thing at our scale. So that's why the borrowings have gone high in our business. So going forward, see, we want to leverage our the supplier ecosystem as well. as a company, we are not entirely dependent on in-house capacity. We kind of have that hybrid concept, manufacturing concept, where a lot of the less complex projects or products we get it manufactured from our supplier ecosystem. So we intend to kind of continue the same strategy where the growth comes from both in-house and outsource capacity.
Tell us one more thing. How does Unimech Aerospace plan to mitigate the risks associated with client concentration, given that it's the single largest customer, contributes 55 to 60% of revenue, and the top 5 customers account for approximately 95% of the total revenue. So there's a lot of client concentration. How do you really look at mitigating that risk?
See, that's where, if you see most of our clients, a lot of our clients that we work with are all kind of, long-term customers. We've been working with them for the last 6 to 7 years. And predominantly, if you have to be specific on the top customer, so this customer have 2 business units, and the revenues come from 2 business units, kind of different business units. Both one is ground support, and the other one is MRO toolings. So while we say that there is a client concentration risk, also we as a business look at it as an advantage, because if you see the overall aerospace segment, we have hardly like 2 or 3 big OEMs under them, hardly about 15-20 kind of the licenses in the tooling segment, and we work with at least 40-50% of them. I think we as a business look at it as not a heavy risk from internal perspective, while we are trying to kind of diversify and diversify the revenue with various other customers, not just within the aerospace toolings, also the other segments on the nuclear and energy sectors.
Sure. How are things in terms of competition with you? Take us through your direct listed peers, in fact, both listed and unlisted players. How is really competition shaping up for you?
See, when I say competition, there are 2 kind of segments, right? When we offer aerospace tooling, so I wouldn't say that. I would say that in the listed space, you wouldn't see many or any tooling kind of players at our scale, or even 1/3 of our scale. Okay, so we have a bigger pie in India, and we continue to kind of have that bigger portion from our customers as part of the value share. And coming to precision components, we are competing with our peers both in India, and these guys have kind of are present in only precision component segment, and that's an emerging business for us. And from a overall business performance point of view, be it PAT or EBITDA margins or the kind of CAGR growth, we are doing significantly better compared to any of our peers.
And how has the overall demand been like this year? International markets, especially your key US market, how is that shaped up in terms of demand? Are there any signs of slowdown at all?
There's no indication of slowdown as of now. It's been, in fact, a very good year for us. We work on 3 to 4 months kind of an order visibility of our projects. So typically we would have the firm order book for 3 to 4 months. So that what I've seen from last 1 or 2 quarters is the order book is becoming more strong and stronger in our business, and especially with the number of aircraft being produced and number of engines coming for maintenance in the coming years. Definitely the trend is very strong upwards.
Lastly, any inorganic expansion plans? Anything in terms of mergers, acquisitions that you're looking forward to?
Yes, we are working on the M&A acquisitions, actually, especially in the adjacent segments. Currently, we are in high mix and low volume, high value product line, and we are trying to kind of expand to high mix, low and medium volume. Sectors like oil and gas and other sectors. And we raised our pre-IPO funding 250 crore a couple of months ago, which was predominantly dedicated for M&A, and so we'll continue to look at as inorganic growth as part of our growth strategy.
All right. Any message to shareholders before I let you go?
No, we are planning for a decent growth. We are kind of a set of humble investors who wants to add a lot of value to all the stakeholders in the business, and especially we would expect to have a lot of investors with a long-term kind of the mindset. So that's a message that I would like to pass.
Sure. All the best, Mr. Puthan, and look forward to interacting with you again once your stock lists. Wish you all the very best for the IPO, and and of course its subsequent listing as well. Thanks a lot for taking out time and joining in and sharing your plans with us.
Thank you. Thank you.
Well, with that, we've come to the end of IPO Watch. Thanks a lot for tuning in. You guys stay tuned to Money Control for all your other news and updates, and I'll catch you soon.